What's going on, guys? So today we're going to be talking a little bit about financial investments and gold. So of course we're talking about gold. I had to break out some gold to look at here. We have a beautiful gold eagle. And I had to break out some silver as well. So we have a silver eagle because we're talking about that. A little comparison between gold and silver. And in the background here we have a corporate presentation from Gold Mining Inc. Well, a small portion of the 30+ page presentation, which goes over all their different sites and different estimates and all kinds of good stuff. But I just got together just a few pages here to talk about, because later on I'm going to tell you how to own gold for $5 an ounce. Well, in and around $5 an ounce. Now, we're talking about physical gold. Can you buy this physical 1 ounce gold coin for $5? Well, no. You'd have to jump into a time machine to do that. And I don't think anytime in the future you'll see $5 gold. However, you can own the equivalent of an ounce of gold for about $5, and I'll talk about that a little bit later. So first, what I want to get into is gold and silver. All right, investments are crashing. Everything's crashing. The stock market's crashing, crypto's crashing, NFTs are crashing, but metals are pretty much staying the same. They're stable. That's why so many people like them so much and they love them as an investment, because they stay stable. They always have. They've been the rocks. Well, the metal, I guess, in this case. Now, even though we do see fluctuations, of course, in the market, gold and silver, as well as platinum and palladium, the top four, right? Gold and silver is kind of the top two, and gold is probably the top one, is extremely, extremely stable. Now, of course, when you're talking about the big boys, it's all about the gold. When you're talking about the small boys, it's all about the silver. And that's kind of the ongoing kind of argument, well, I shouldn't say argument, but the ongoing discussion is what to invest in more, silver or gold. For the little guy who only has a couple bucks to invest, silver, physical silver, is a fantastic investment because you can gain quite a bit of it for a relatively low price, especially compared to gold. But what I've seen lately, because I watch a lot of the metals communities here on YouTube, all the different people making awesome videos on silver and gold, and so many people are silver bugs. In fact, a lot of those people even have silver in their YouTube names. But I'm seeing a big transition from this stuff to this stuff. There's a couple reasons why. Number one, once you accumulate so much silver, it gets physically hard to store. All right, it's actually very heavy. When you're talking about investing thousands or tens of thousands of dollars, silver becomes quite a large pile very quickly. But when you're talking about gold, you can have a lot of wealth in a very small area physically. And that's why I see so many people, transferring over to gold. Not only is it just storage issues, but gold is even more liquid than silver. It's very easy to sell silver, but gold is even easier. Now, of course, the one thing that keeps people from obtaining gold and turning to silver is its cost. Gold is obviously way more expensive than silver. But today we're going to be talking about how to get your hands on a little bit of gold without actually getting your hands on gold, and how gold could be much more affordable to you. And that is with gold stocks, all right? Specifically gold mining stocks. As we all know, this stuff doesn't just show up at the coin shops, all right? It doesn't just show up at your bullion dealers. This has to be pulled out of the ground, molded, shaped, stamped, and then it's sold, right? So it all comes from the earth. In fact, not even really from the earth. If you look at the science and the history of gold, apparently it is from different asteroids and whatnot that hit our planet. And so technically it's not even from earth. However, since day one of human beings finding it in the ground, they put value on it all throughout history, even today in 2022. So with that, let's talk a little bit about gold mining, how to get this shiny stuff out of the ground. So today I'd like to thank Gold Mining Inc. for sponsoring this video. Gold Mining Inc. is on the New York Stock Exchange under GLDG. They are very well known. In fact, here you can see the information right on the cover page of this presentation. There's their website if you want to learn more. In fact, the owner of Gold Mining Inc. is Amir Adnani, and Amir owns two huge uranium companies, UEC as well as UROY. UEC is Uranium Energy Corp, and UROY is Uranium Royalty Corp. Now, uranium stocks have been through the roof and a kind of a go-to for the energy sector as far as investing. I'm not going to talk about uranium stuff today, But do your research. If you're looking to investing opportunities, that's something to look into. Now, to show you real quick, I did print out the two charts here just to touch upon uranium just a little bit here, just because the owner of Gold Mining Inc. also has lots of other investments, including top uranium stocks. But here is the 5-year chart for UEC. All right, and then this is the 5-year chart for UROY. All right, but extremely impressive. Again, that would be perhaps for another video in the future. Today, we're focusing on gold. It is an extremely bear market, which means prices are tanking, or maybe the charts go like that. Something to think about real quick that helps me remember, the difference between a bear market and a bull market, because I know when people talk about investments in stock and all that kind of stuff, that comes up very often. And it's sometimes a little confusing. Well, what's a bear market? What's a bull market? Well, if you picture a bull, which is kind of down here, fighting a bear on its hind legs, that is just a quick visual reference. The bull is low, okay? So a bull to fight a bear has to go up. So a bull market goes up. The bear fights down. So the bear market goes down. So bear, no good, at least when you own a bunch of stuff. Bull, very good. Bull goes up. So hopefully that gives you something to remember as far as the difference between a bear and a bull market. So obviously things are tanking, and we're hoping to, as investors, put money into stuff when it's really cheap. And then when the economy gets better and things start to look up, of course, values go up. And then you sell when it's higher. That's how you make money. That's how people invest. All right, that's the very, very basics of it. But right now, stocks are down. They're very, very low. So it is a great time if you happen to have a little extra money to invest. Now, unfortunately, with timing, when stocks are low, it's because the economy is not doing great. When the economy is not doing great, people generally don't have a lot of money. We see gas prices are through the roof. All right, so people's expenses are through the roof, and with that means there's not a whole lot of extra money to invest. However, if you do have that money, now is the time. This is the opportunity to get in low so that later you could sell it high. So again, this presentation is like 30 plus pages long. I just wanted to print out just a couple of them here. All right, so that I can show you just some of these basics, okay? Because it goes into a lot of details on the different locations and different numbers and stuff. But this is basically showing you a lot of their locations here, okay, across Canada, North America, South America. All right, you can see some numbers here as well as far as the mining goes. If you're not familiar, this is a gold mine. They're looking for gold, but there's a byproduct of silver and copper, which obviously have a lot of value as well. So that often happens when someone's mining for one thing, they find other stuff as well. So you can see the numbers here for gold is about 81% of what they're pulling out of the ground. Copper represents about 18%, and silver about 1%. All right, but again, these are important to see these locations here. This is something else I wanted to show you real quick as far as, a quick visual with these, the chart from 2007. This is representing MOZ, which stands for millions of ounces, okay, of resources. In this case, we're talking about gold specifically. This is the global resources, all right? And the point of this is to show that it's been on a decline. So back in 2007, there was about 700 million ounces of gold. 2008, 830 million, and so forth. You see it peaked here at 967 million ounces in 2012, and repetitively went down and down every year after that. Why is this important? Because the least amount of gold that's being pulled out of the ground means that there's not enough supply. So supply is low, demand is high. What happens? The prices go up. So it's important to see, charts like this when you're looking to invest, especially in a mining company, because you want to make sure the resources, what they're mining for, is going to be worth a lot more money in the future. Again, going back to the basics of investing, buy cheap, sell high. So the idea is that every year since 2012, the production of metals coming out of the ground is less and less. However, up here on the top of Earth's crust, we're putting metals into all kinds of stuff in industry constantly. Specifically, if you're looking at like electronics and technology with all of our cell phones and the progression of electric cars and charging stations, all that stuff needs metals, right? They use metals for connectivity and all kinds of different things. So The supply is getting lower and lower, but the demand is increasing year by year. All right, so there's going to be a bull market in the future where the prices are going to go up. All right, so let's take a look at the next page real quick. I just showed just a couple of these locations again for the, maybe savvy investors to see some of these numbers. I'm not going to go over all the details, otherwise it'll be a really long video. But you can see another location in Brazil. All right, Whistler, this is a particularly interesting location. Again, you guys can go to their website or you can just, Google this information. The company is very well known. But a couple of these locations, they're literally sitting on a gold mine, like no pun intended, but yeah, it's a gold mine all over the place. But the potential is amazing. All right, so here's Yellowknife, which of course is extra special to me because I'm the knife guy. So yeah, just a couple different locations. This is what I want to focus on though. So when, if you're not familiar with mining, they take samples of the ground, they'll take core samples, they'll look through those samples, they'll see basically how much of a certain mineral, or in this case we're talking about gold, so how much gold is in a certain amount of dirt. Now I happen to just really be into this kind of stuff. I've watched pretty much every gold mining show that there is on like Discovery Channel. I'm fascinated by the whole thing, but as far as like a potential investor, me looking at these numbers, it's important to understand every detail. I do want to say if you're going to invest your money, you should learn about it. Don't just take someone's word for it. Don't just take someone's random advice. Please do your research, look at all the numbers, see the actual potential, and understand what you're investing in. But I did kind of highlight this stuff just to go over it real quick. This is G/T, which translates to grams per ton. Okay, so when you're taking samples out of the ground, what you're trying to figure out is the potential. Okay, so if I mine, 500,000 tons of it, how much gold am I probably going to get based on a couple samples? So you take maybe 10 samples, you take an average of that samples, in some cases maybe take 100 samples, 1,000 samples, who knows? But you get a really good idea before you start investing money, because mining costs a lot of money. That's why gold and silver has a lot of value, because it takes so much resources and so much money to actually pull it out of the ground. If you watch these different types of mining shows, you'll see their diesel bills are like $1,000 a day, $10,000 a day. It just depends, I guess, how big the mine is. They have to buy hundreds of thousands of dollars or millions of dollars worth of equipment. All right, a lot of manpower, a lot of equipment, and a lot of fuel. All right, and also a lot of time. So generally speaking, in the mining industry, anything that is 2 grams per ton or more is considered great. That's definitely going to show a very good yield, okay, and a nice profit. So this is just, again, you guys can pause the screen here and look at this. I just highlighted it just for gold here. I also highlighted the potential for silver and copper as well on some of these locations. These are the totals here for these little locations. Okay, it's broken down into basically 3 separate sections, but I'm going to put the papers like that. So you can pause there and look at those numbers, and you can pause there and look at those numbers. But yeah, I just wanted to give you that quick visualization just to give you some idea of what Gold Mining Inc. is offering. So if you're interested in getting some gold, but you don't have $2,000 for a 1 ounce coin, you just want to get a little bit of gold, or you just have a little bit of money to invest, it's very important to look at different types of mine options. Okay, investing in the people pulling it out of the ground is just as important as investing in the metal itself, because without the mines, obviously we're not going to have it, and the supply would run out. Now in this particular case, Gold Mining Inc. is one of the big boys. Okay, so much so, if you guys are familiar with like Rick Rule or Doug Casey, these are huge investors, very well known. They are investing in this company, as well as BlackRock. Now, BlackRock Inc. is literally the world's largest asset managing company. They have over $10 trillion in assets. Okay, so this is big boy money. You know what I mean? And these big boys, they don't take lightly to just randomly investing in things. They believe in this because they understand the potential, especially when the prices are so low like they are right now. When the value of gold, the spot price of gold goes up, so does the stocks in gold mines. That's just how it works. All right, now earlier I said that you can get $5 an ounce of gold. Well, like I said, you can't physically get physical gold that you can hold in your hand for $5 an ounce. You'd have to spend a lot of money to get physical gold, as we know. However, if you invest in these mining stocks, the math works out to be about $5 an ounce, okay? Just pull this up on my phone. All right, GLDG, as of the filming this video, is $1.12 a share. Now, I'm not going to bore you with all the math, but of course you can look it up. But the potential gold that's in the ground on those sites, all the different locations that they have access to, you know, that's what it works out to be, about $5 an ounce. So if you're interested in making smaller investments, or if you just don't want to worry about having physical gold, I know that's one concern some people have. That's why the paper market is so huge, especially a lot of rich people. Maybe they don't want to have so much access to physical gold because then they have to store it properly and have security and safes and all that kind of stuff. The paper gold market's a whole separate issue. Maybe I'll talk about that in a future video. But it's just another option, and options are always good. To be able to have a bunch of shares in a mining company, have access to it on your cell phone, you can buy and sell whenever you want. You don't have to worry about going down to a coin shop or a pawn shop to sell your gold. It's just something different. I like to have a variety of different investments. Of course, I do like having access to physical metals like physical gold and physical silver, but I do have stocks. I do invest in different types of stocks, and it's nice to have a portfolio, to have a little range of investments. So when one's not doing so great, another one backs it up. But in this particular case, like I said, regardless of whatever you might be interested in, now is the time to jump on it. If you have that income that's expendable to invest, these are fantastic options. Again, I'm a firm believer in Amir Adnani. He is a very smart man. He went in, bought a bunch of these properties, bought a bunch of these investments when prices were low, and they've already increased quite a bit. I can tell you personally, when the pandemic first hit, that's when I first got into the stock market. I realized the potential to make money by buying stocks when everything tanked. So that's why I wanted to bring this opportunity to everyone, anyone who is thinking about stuff like this. You should very much do your own research, look really into it. Like I said, get all the details. It's important that you're using your hard-earned money in something you believe in. Okay, don't just take random advice from people, but I think this is a fantastic potential to have a very good profit and people to make a very good investment. So that's it for today, guys, but I'd love to hear your experiences down below in the comment section about investing in gold and silver, and of course investing in stocks and different types of mining companies specifically. But it is just a great time to get in when prices are low. So just wanted to give my 2 cents on the subject. So that's all. Hopefully you guys have a fantastic day, and I'll see you tomorrow with a brand new video. Take care.